Today, we're excited to have Brian Kaiser join us on the show for the first time. Brian is a seasoned CFO who recently presented a seminar in our office called Unlocking Hidden Profits. It was packed with smart insights, practical advice, real-world strategies for business owners looking to better understand their numbers and take control of their profitability. So today we're diving in on that presentation with you, Brian, and talking more about the value a fractional CFO brings to the table. So welcome, Brian.
Thanks, Kelsey. Glad to be here to share.
Great. Let's start just right from the beginning, because I know some of our listeners might not be totally familiar with this role. So for those who may not know the term, what exactly is a fractional CFO and how do you help businesses?
I've found that a lot of business owners have never heard the term before, so it is very uncommon or unknown. It's really think of it as a part-time financial leader for a business. Can help businesses with their finance, their strategy, managing cash flow, reviewing profitability, just anything that I can do to help a business who can't afford a full-time chief financial officer. They can afford me on a fractional part-time basis, usually aimed at smaller businesses under 20 million, and a lot of times startups too. And I work on a recurring contract or sometimes just a part-time job basis.
Great. So when you say part-time, how part-time is it? If I was a business owner, could I have you come in for 2 hours a week? And then if we find out that's not enough, can we redo the contract, or have you come less or have you come more? Is that kind of how it works?
It really does vary by client, and it can be as much as a project of 2 to 5 hours one time, or it can be 2 hours a week, 5 hours a week. It all depends upon what the client needs and the level of work and expertise that we need to bring to the table.
Okay, great. Thanks for breaking that down. Let's dive into your presentation that you did the other week for us. The seminar, it was called Unlocking Hidden Profits. So what inspired you to create this, and who is it really for?
Really, it's for the smaller businesses. And I call them small businesses because that's what people know them as. But to the business owner, they're not small. It's important. It's their life. But I'm really looking at companies with annual revenues under 20 million.
Okay, that would be considered small.
That'd be considered small. And I've seen that a lot of those businesses, they're frustrated. They work so hard, but they don't have as much profit or cash to show for it. And so they just are sometimes puzzled what to do. And many of them are looking at every different direction for, what's the latest fad? What's the newest book? What's AI going to, AI can change my business, or this new ERP or software is going to be the game changer. Maybe those things all have some value and they're all good. However, instead of investing hours and dollars, I want to give them some fundamental, basic things that they can do today. Just roll up their sleeves and start doing them right now to really make a dramatic impact on their business, and usually can result in increased profits and better cash flow.
So you start your seminar with a slide titled You and the 6 Keys. Why is it important that the business owner plays such a central role in profitability?
Really, I wanted them to know it's about them. It's their business, and we want them to be successful. And because any project, any initiative, they as a business owner are the ones who have the most invested in it. It's them. It's their business. They're the ones who are going to want it more than anybody else. But on the other side of the equation is, if they aren't behind it, if they aren't championing it, it's not going to happen in their business. So they need to be the ones really being the driver and the cheerleader to make it happen.
Yep, definitely. Before we get into the 6 keys, you talk about prerequisites, things that need to be in place first. What do you believe a business absolutely needs to understand or commit to before they can start unlocking hidden profits? And I know you said buy-in from the business owner, but what else?
The business owner needs to know what their goal is. Every business owner has a different goal. They need to know what they want to do in the next 3 to 5 years. If the goals can vary from they just want to grow profitability. If they're thinking of selling in a few years, maybe they want to focus on EBITDA and boost EBITDA as much as they can. Other business owners just they want to create as much cash flow as they can. And others, it could be a focus on I want to pay as little tax as possible. So every business has a different goal, a different thing they're trying to achieve, and we need to just nail that down so that we are all marching in the same direction.
Great. So from there, your next key theme is all about accurate information.
Yes.
So you make a strong statement. You said bad data equals bad decisions. So what kind of bad data do you typically see when you are working with business owners?
It really takes all shapes and sizes. There probably is no one common culprit, but you could categorize it in a lot of different places. Simple things as their bank accounts and credit card statements aren't reconciled. That's very typical. Or it could be things like not all the entries are posted in their general ledger. They got some checks that are still outstanding they're not aware of. Maybe just some entries are posted incorrectly. Other ones would be financial statements aren't structured correctly. Oh, I've seen that so many times. And so you can look at a financial statement and it doesn't make any sense because they don't have things in the right place. Um, and it's probably no surprise that when I go and talk with a client, these prerequisites are the first things we talk about. What's your goal? But also we dive into their financials and we start looking to make sure we're starting with good, accurate information.
So on the flip side of that, Brian, what does good data unlock for a company? You mentioned confidence, trust, and better decisions in your seminar. So can you expand on that?
Sure. I said bad data equals bad decisions, but good data doesn't necessarily equal good decisions. But what it does do is it gives you the opportunity to make good decisions because you have good information on which to base those choices you make in business. But really, when it comes to confidence, if it can reduce you and your anxiety level. If you know that the numbers are good, you're not sitting up at night wondering if where am I at. So you have good, it reduce your anxiety and increase your comfort level and your confidence, but also your employees. Maybe you have other owners, gives them confidence to know that the data is good and they can believe it and trust it. Probably some most important areas, though, would be like your bankers. If you have shareholders or someone who's looking at maybe acquiring or investing into your business, if they know that data is good and accurate, it boosts their confidence dramatically.
So let's talk about key point number 3, cash flow. Where is it going? Because even when a business is profitable on paper, cash flow can still be a mystery. And one of your slides simply asks, where is my cash going? Why is this such a common source of confusion for business owners?
Owners are often not in the details of their business. Their bookkeeper, their accountant may hand them financial statements at the end of the month, or may each weekly say, "Well, here's where we are cash wise," but they rarely dig into the numbers and all the details and know what's there. And so it can be very surprising to them that they don't know where the cash is going. Um, and oftentimes bookkeepers or accountants who are doing the information putting together the information for business owners, they're sort of desensitized. They're grinding through the work as fast as they can because they're usually overloaded, and they don't stop to give thought to any of the numbers that they're processing. And so that oftentimes things get just missed or they're unaware of. And I think I like to tell people, I everybody's seen those ads for cell phone usage. Like, do you have apps that you don't know you're spending money on every month? You spend 25, 50, $100 a month on these apps and you don't even use them. Well, the same can be true in your business.
Oh,
What
yeah.
are you spending money on that you're not aware of?
Yeah.
I had one business owner, it was a simple thing. We were just looking through his expenses, and he goes, "What's that $60 Adobe charge?" I go, "Well, you're spending $60 for Adobe each month." He goes, "We don't use Adobe."
Yeah.
I mean, that's just one simple example,
That they
and
add up.
they add up, and it's oftentimes death by a thousand cuts.
Yeah. So you suggest reviewing cash flow over the past 1 to 3 months. And what patterns should people be looking for in that short-term review?
Yes, I say 1 to 3 months because oftentimes, not all expenses are monthly, and so if you look at over a longer period of time, then you'll be able to hopefully pick up more things that, you're not aware of. But really, I would start with things like recurring charges, something that hits your credit card bill or your bank account every month.
Okay.
Just double check on those. Things like subscriptions, dues, um, automobile fuel, employee using company credit cards, automated payments to anything. I will even say double check payroll, because oftentimes money goes out the door in payroll you're not aware of. Maybe extra overtime, or the payroll processing company just can sometimes tack on extra fees and costs that you're just not aware of. It ends up costing you more than you think it does.
You also highlight the difference between net profit and cash flow in your seminar. Why do business owners need to separate those two in their mind?
Don't want to get too nerdy and be too much of an accountant, but there really is a difference between cash flow and net profit because there are numerous things that a company spends cash on that don't flow through their P&L. And some of those things are very probably well known, like fixed assets. If you buy a new automobile for your business or a new warehouse, well, you're going to pay cash for it, but it's not going to be on your income statement, so you won't see it. Also, things like owner disbursements. Sometimes owners forget that they paid themselves money throughout the year, but those don't show up on their P&L. And all of a sudden, they get to the end of the year, they have a large profit but no cash. Probably the most common area that I see it is businesses who sell a product. They build up inventory, and inventory will not hit your P&L until you actually sell it as cost of goods. And so if you're growing inventory, if you're investing and building that up, you can have tens of thousands, if not hundreds of thousands or millions of dollars in inventory that you've spent cash, that you won't see, that will go out the door, and your P&L may still show a nice profit.
Well, that leads us right into the concept of the cash conversion cycle. So, for folks who haven't heard of it, and you talked about this in your seminar, what is the cash conversion cycle and why does it matter?
Yeah. I like to look at a very simple basis. It's the amount of time from when you spend cash to buy a product from a supplier until you get the cash in the door from selling that product, turning around and selling it to a customer. So if you think of like a restaurant's a great example of a short term. Like you may go to the food supply, buy your food today, it's perishable, so you're going to sell it in the next 3 days. At your restaurant, your customer pays with a credit card, so your cash conversion cycle can be under 5 days.
Yeah.
However, if you have a more durable good, and maybe you're importing it from overseas, you could spend cash, and maybe 30, 60, 90 days before that product even gets to your warehouse. And then it has a long shelf life. So if you sell it in 60 days and then spend another 30 to 45 days waiting to get paid by the customer, your cash conversion cycle can be 120, 180 days. And the whole key with that cycle is trying to compress that, shrink it down to as short a time as possible. And I wanted to focus on especially managing accounts receivable. Once you sell the product, if you have to wait to get that money from your customer, that is time that's adding to your cycle, and that's cash that you don't have in your pocket. So making a concerted effort to get those receivables paid by your customers is a real key.
Brian, let's shift into something that can actually make or break a business, and that's knowing your true costs.
Mhm.
So let's talk COGS, cost of goods sold, costs of services. How often do business owners miscalculate what it actually costs to deliver their product or service?
I would say more common than you would think it is. Uh, and we'll talk about a little bit later, but I always like to keep in mind the concept of cost creep. Um, we all know that prices always seem to change, and never seem to go down. But so if you as a business owner, if your product or the cost of your service you provide um, goes up, and you are not adjusting prices, then you are probably shrinking your margins. And that's very common. And I say look at it quarterly at least,
Okay.
because we know we've seen over the last couple of years when inflation has been pretty high. If you're not looking at your costs, then you're probably losing margin every month. And so we just want to keep digging into that, keep an eye on it, and making sure you know exactly what it costs you.
Could you give an example where a business was underpricing due to hidden overlooked costs?
Sure can. There's a construction client I know of, worked with them. And first thing I do is say, well, what's your cost of goods? And they say, well, our cost of goods is about 60%. And we started looking at their numbers, and they were not categorizing all their expenses correctly. So many of their cost of goods items were down in their operating expense. And here again, not to be much of a nerdy accountant, but we started recategorizing some of those expenses, and their cost of goods went from 60% up to 72%
Wow.
just by capturing the correct costs where they needed to be.
And is
And
that something that you could deliver as a service as a fractional CFO, just going in and looking, every couple months?
absolutely, it's something that we do, and it's an ongoing thing. We'll talk a little bit later about reviewing financial statements on a monthly basis, and as a part of that, we're always looking at your cost of goods and the cost of goods percentage. And if that is changing, if that's drifting upwards, or drifting downwards, we're going to want to dig into that and find out why. And if it means that our actual underlying costs are going up, we're going to have a hard conversation about when do we adjust pricing to make up for it.
So even if the pricing is right, fixed costs can quietly eat into your profits. So what should a business owner know about their overhead rate, and how does it factor into profitability?
Sure. Their overhead rate is a real simple calculation, and it's just your total overhead or your fixed costs, and divide that by revenue. And every business is different, and every business has different overhead levels that are normal. But if you're trying to aim for about 30% overhead, that's probably a good target. And the great thing about that is, by definition, they're fixed, and so they shouldn't change from month to month very much. And so all you have to do is increase your revenue, and most of that revenue increase will drop straight to the bottom line, unless you allow cost creep to get in the door.
Okay, that's my next question, Brian. You will grow net profit when you grow revenue. That's something you said in your seminar. If you don't allow cost creep, what is cost creep, and how can businesses prevent it?
It's allowing those fixed costs to incrementally inch up.
Okay.
And I see a very common was a business has a real good month. Yay, they got a lot of cash in the bank. So they get a little bit loose on spending money. Well, let's do a company meal. Let's do this, or let's go on a vacation, or we can do this. It's just taking your eye off the ball. And we're going to talk about budgets in a minute. But if it's not staying diligent, not staying disciplined to make sure you follow plan and spend money the way you expect to.
Okay. So we've got our pricing right.
Yep,
We're watching our overhead.
that's right.
Now we need to stay on track.
Yes.
A big part of your seminar, and what a lot of people left the seminar wanting more information on, was budgets and forecasts. And you are a big advocate for budgets and forecasts. Why are they essential? Not just for big corporations, but for small and mid-sized businesses too.
Sure. I I always come back and I always remember a quote by the famous Zig Ziglar, the business coach and trainer. And his quote is, if you aim at nothing, you'll hit it every time.
Yeah.
And running a business without forecasts and budgets is like aiming at a target, not aiming at any target. And so um, what we try to do is make sure that business owners have a budget in place and not just a mental one. It's got to be written. It's got to be as detailed as you can get. And when you think of budgets, usually you think of expenses, and forecast is going to be revenue. Um, I was shocked by a study I read a while back, which says that for businesses under 200 million a year in revenue, over 50% of those businesses do not have a formal written budget.
Wow.
And it's like, if you're 100 million a year and you don't have a formal budget, how are you doing that?
Yeah.
And the estimate for businesses of 20 million or less is well over 80% do not have a budget. And it's like, if you don't have a budget, how do you know how you're doing?
Exactly.
Financial numbers without context are benign.
Yeah.
They're meaningless. And budgets and forecasts, that's what puts the context into those numbers. They're what you gauge performance by. It's how you gauge if your expenses are in line or not. It's how you determine if your revenue is hitting target. You have to have targets. You have to have budgets. That way you know if you're heading in the right direction.
So you ended your seminar with the final key, and that was what you're just talking about now, comparing actual results to the budget. What are some of the most common profit leaks that show up during this comparison?
You bet. And I would say it goes back to our prerequisite number one, knowing where your cash is going. I mean, and surprisingly, payroll is a big one. And I touched on earlier, overtime, unnecessary or unsupported overtime is a big drain to the business. It can add up really quick. Other areas, things like meals and entertainment, business travel, subscriptions. I had my wife is a former real estate broker, and weekly, if definitely monthly, sometimes weekly, she would get phone calls from somebody. It's like, oh, here, if you do this, we can help you market or earn more revenue or get more clients. It was so good for her to just say, nope, here, my marketing budget is this.
Yeah.
I've already determined what I'm going to spend it on. No, thank you. And you can easily say yes to the latest shiny thing that comes along, and it can take your eye off the ball.
Yeah.
And so it's just staying focused, staying disciplined, sticking to plan, and just having good financial discipline in everything you do.
And a budget is very freeing.
It is.
Yeah.
Very freeing. And it's so nice to be able to, that's part of what I tell business owners, it reduces their anxiety.
Yeah.
Knowing that they know what they're supposed to do, they know if they're doing it or not. It can make your business decisions so much easier.
Yeah.
If you have a budget you can compare your actual results to.
Well, Brian, I can't thank you enough. It was an incredible seminar, and we're excited for more things that you will be hosting here in the office. For our current clients that have not met you yet or not working with you, and also people that are not working with us at all in the firm yet, what's the best way to get a hold of you so that you can meet with a business owner and start this conversation?
Really, they can reach out to the firm. I think our website has a place where you can click on info. You know all the details.
Yeah.
If you wanted to reach out to me personally, my email is briankaiser@anthem.cpa.
Great.
And
or reach out on our website on the Contact Us page, and
absolutely,
we'll get them right in touch with you.
For sure.
Awesome. Well, thank you so much, Brian.
You bet, Kelsey.
We'll talk soon.
Thank you.